US inflation hit a 40-year high in the middle of 2022. But on February 7th, 2023, Jerome Powell signaled that he believes the disinflationary process has begun. And the top name on our list has analysts pushing the price target up 68% from today's closing price. And to make it even better, it pays the highest dividend on the list. Many stocks struggled as inflation rose, but some were worse than others. Today, we will discuss the top 5 dividend-paying stocks that performed best when inflation is low. In fact, these stocks have the highest negative correlation to US inflation since 1975. And with the announcement from Jerome Powell that inflation is falling, these 5 names could experience a relief rally really soon. To keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. Starting off our list is a popular retailer, Ross. Ticker symbol ROST. Come on guys, if you're in search of a retail stock that can weather any economic storm, it's Ross's. Despite a minor hiccup in Q3 with a 3% dip in same-store sales, things are looking up for this off-price retail giant. Ross has a solid track record of growth through thick and thin, and as inflation hits consumers' wallets, it seems Ross has actually seen an advantage with shoppers seeking out more budget-friendly options. To add insult to injury, it looks like Ross may have even snagged some market share from its higher priced competitors. Bank of America has greenlit Ross's with a buy rating and a $125 price target for their stock. And on top of that, it is still below pre-COVID levels, and I can't see them coming out of the recession in worse business conditions than before. Currently, Ross pays a dividend yield of 1.07%. The lowest on our list, but again, we will be working on our way up. So, next on our list, Ball Corp. Ticker symbol BALL. Ball Corp is a big player in the aluminum packaging industry. Provided the US avoids a major economic downturn and inflation stays in check, the stock is positioned well. With signaling from the Fed, this could be a very good sign for Ball Corp. Analysts believe that aluminum cans are the future of packaging. They are slowly but surely taking over from plastic and glass bottles, and Ball is at the forefront of this revolution. With long-term contracts in place, Ball offers investors a degree of financial security that's hard to come by these days. Analysts predict that the company will generate a healthy $427 million in free cash flow in 2023. Bank of America has given Ball the seal of approval with a buy rating and a target share price of $61. So, if you're looking for a smart investment that can keep your portfolio fizzy and fresh, Ball Corp might just be the perfect choice for you. Currently, Ball Corp pays a dividend yield of 1.36%. Next on our list, another popular retailer, we have Lowe's Cost Inc. Ticker symbol LOW. Lowe's Inc., the home improvement retailer that gives Home Depot a run for its money. The forecast is looking good for the company, with inflation expected to continue easing and margins expected to expand. It's also no secret that home improvement industry has been booming in the recent years, with people investing in their homes more than ever before. And that's great news for companies like Lowe's, which has everything you need for your next DIY project or even your next home renovation. But what sets Lowe's apart is the leadership at the helm, steering the ship towards even greater success. Their CEO, Marvin Ellison, and the rest of the management team that joined Lowe's in 2018 have been handling the changing economic environment magnificently. Their leadership has driven the company to generate a total return that doubled the S&P 500 from 2018 to 2022. That performance made Lowe's one of the top picks for shareholder return investments in the retail sector. Bank of America gives the company a buy rating and a $278 price target for their stock. So, if you're looking for a solid investment in the retail sector, look no further than Lowe's. Currently, Lowe's pays a dividend yield of 1.95%. We still have 2 more stocks, each paying more than a 2% dividend yield, and our number 1 pick with over 68% upside potential still left on our list. But first, if you like these kinds of videos and want us to find different stocks for your investment portfolio, be sure to leave us a comment down below. Also, all the names on this list can be invested in for just $5 if you use Webull and the fractional share purchase program. So with just $25, you can get all 5 companies in today's list and start earning dividend income right away. Next on our list, and competitor to Lowe's, we have Home Depot Inc., ticker symbol HD. Home Depot is one of the largest home improvement retailers in North America, and recently it has been impressing the industry analysts. According to analysts, Home Depot has done an amazing job of navigating inflationary pressures and keeping their margins strong despite the rising costs. And now, as inflation begins to ease in 2023, Home Depot is in a prime position to grow those margins even further. In fact, analysts predict that we'll see a 2% increase in same-store sales this year. But it's not just the financials that are impressing the experts. Even though the housing market has slowed down a bit recently, Home Depot is still seeing a high demand from its professional customers. And with home improvement investment predicted to remain above pre-pandemic levels for the near future, there's plenty of room for growth. Bank of America has a buy rating and a price target of $360 for Home Depot stock. This makes Home Depot one of the most attractive investments in the retail sector, with strong management and a long history of success. All signs are pointing to continued growth for this home improvement giant. Currently, Home Depot pays a dividend yield of 2.31%. Last on our list, and my favorite grocery store, a store I spend time in just browsing and walking the aisles with my wife, Kroger, ticker symbol KR. Kroger is one of the biggest grocery retailers in the US and has been making waves in the industry for all the right reasons. According to analysts, Kroger has mastered the art of balancing the rising costs of inflation with competitive prices. In 2022, the prices at Kroger were only 8% higher than those at discount retailer Walmart. This impressive feat has resulted in Kroger consistently reporting earnings beats and continually raising its guidance. And if that wasn't enough, the retailer has also seen strong growth among higher income earners. The Kroger loyalty program and fuel rewards have proven to be a hit with shoppers in these inflationary times. Bank of America has given Kroger a buy rating and a $75 price target for the company's stock, giving it a 68% increase in price from today's closing price of $44.47. Kroger has truly proven that it's a grocery retailer worth keeping an eye on. Currently, Kroger pays a 2.33% dividend yield. I hope you enjoyed this list of the top stocks to buy when inflation is falling. To learn more about dividend stocks that have growing dividends for the past 5 years, click here on our next video.